the xAI and SpaceX potential merger. Last week, I've heard about this. And then Monday itself, done deal. These are all Elon Musk baby lah. So what happened is SpaceX, which is the rocket company, have acquired xAI. So these two companies have merged together, become a $1.3 trillion private company. When I heard about it, right, it's like, this one single company, right, is the whole Singapore market really. 1.3 trillion. And if you look at all the banks, right, not even reach $500 billion. SpaceX is the rocket company, whereby they launched the rocket. And then the major company, the major beneficiary is this service, they call it Starlink. So Starlink is the satellite connection that you can buy internet connection. So Starlink is the major beneficiary of SpaceX, and then they have been making money, not just making revenue. They are making profits from SpaceX, like providing Starlink kind of connection. It's not our like conventional tower, things like that. It's a satellite connection. So you can have connection at any place on Earth. Data center in space as well. So they propose actually the best energy to take is solar energy. And the best place to get all those solar energy, right, is in the space. And if it's in the space, they don't need to pay expensive energy costs just to power up data center or data space. So that's why they thought when these two companies come together, it can have better efficiency. SpaceX launched all the data center powered by solar, and xAI can use all the computational power that are in the space. The cheapest way to scale AI computing because of the energy. You got SpaceX, Starlink, xAI, and X. So these are the companies that under one roof right now. So the target payload is up to 200 tons per launch. And today, right, there's only less than a 10,000 orbital data center. And they like to launch up to 1 million satellites. So 10,000 today and 1 million is how many times? 100 times. So they are looking at 100 times satellite above us. Wow. If there's a solar energy center generator up there, it's a matter of how to transfer it down to Earth. I don't know. I'm not an expert on this lah. But if you just power up our data center up there, we use Starlink, the transmitter, to transmit down data, I think that can be done. So this is the thing about xAI, and it's done deal. And actually, this is not the end. What Elon Musk may want to do is to consolidate everything. Even Tesla, the tunnel company called Boring, they want to consolidate everything under one roof. Yeah, we're gonna say wait for the IPO. I don't know. Maybe they just want to pump into Tesla. I don't know. But I don't think it's easy to pump into Tesla. So let's go into Palantir. This is the one single slide or one single explanation on its earnings update. Palantir, the end of one breakout, and encapsulate every important pointer of its update. So first point, 127. In SaaS world, right, means SaaS lah, software as a service world. When they started, there's this thing called the rule of 40. What is the rule of 40? Sometimes company will intentionally put more resources to grow while hurting their bottom line for a short moment of time. Why? Because the revenue grows so fast, right? If I give up my profit at this early stage, when the revenue goes so much and when it time to turn profit, right, it can be very much profitable later. So that's why some companies, they can like grow 60% revenue, but the bottom line, right, they make losses at 20. 80, is it 80? Just now I said 80. 80 minus 20 is 60. So it's still above the rule of 40. Back then, this is how people like justify making losses but growing revenue. And this crazy guy of Palantir just redefined this space is the rule of 127 or the rule of above 120, because across the board, no one can break the 120 rule. So they just come up with this themselves. And then they also mentioned this thing called N of 1. All right. At first, I don't know what is N of 1. What is it about? Maybe you correct me later. I think this is the experimental method that practiced by the pharmaceutical industry. N equals 1 means I only have this unique person. I don't go like sample like 30, 40 people just to do this test. I just sample this one people because it's unique to this person. But I use different medications and see which medication works for this one person. N equals to 1. This is the first pointer. Second pointer is their year-on-year revenue. This Q4 2025, it grew by 70%. So what does this mean? So let's say their price to sales ratio is 100. If they grow 100%, their forward price to sales ratio is 50. So their valuations can cut by half in a single year if it's 100%. So 70% is like cut by, how should I put it? It's like 100, it grow by 70%. So it's like divide by, so it's 60 times. So let's say their price to sales is 100%, right? The next year, moving forward, is 68%. So that's why it want to justify the high valuation. So you are investing at a very high valuation, hoping it continue to maintain this kind of growth rate and not drop drastically. So in this current quarter, right, their growth is mainly in US. This is what they say. This is what they say. I don't know, but they say they have intentionally put more emphasis in growing US government and US commercial clients. So their international space are not growing and their client count for international actually reduced by a few. Yeah. So is this a danger sign or is this an opportunity sign? Danger means they are so reliant on US market. If they cannot grow in US market, they have trouble. Opportunity sign is if US have saturated, they can grow international market and get more pie of market shares from there. So if you understand about their business, actually their US government business, a lot of it are like giving the intelligence for all the army, navy, kind of so-called intel. Yeah. And does this business sounds well for international client? I also don't know what is the perceived value for the international client, because right now what they say is they put their resources into growing US market, and with all the resources putting in US market, right, they are still doing their best to cope to the demand. So this is what they say. So you see like their strategic engine is AIP and warp speed, and one of the example they show is right now they are not just sharing software, but in actual fact they are building the whole infrastructure for the Navy SEALs, in a sense that they can reduce the planning time of building a ship. So previously they used 160 hours just to plan all these things. Right now, they just use 10 minutes. So this is 70% growth. They also highlight, remember, this is the financial 2025, right? Their Q4 right, is grow 90%. Year on year is grow at 75%. And their rule of 40 for the quarter is 127. If you get whole year, is 100.6%. You see they are improving in terms of their rule of 40. And can they maintain rule of 40? In other words, if rule of 40, their revenue grow 90%, their profitability is 30%. So 90 plus 30, maybe I just round in a sense, 40 lah. So 90% growth, 40% profit margin. This is specific to operating profit margin, all right? So you need to grow 90 and maintain high profit margin at 40 to achieve 120. So if they want to maintain 120 next year, looking at their yearly growth target 60%, right? In other words, their profit margin need to be 60 just to maintain 120. Means when their revenue grow down, to maintain their 120%, their profit margin need to go up. So remember this like showcasing. This is the thing they built called shipOS to the Navy. Guess how much this contract size is? If the Navy are building a ship that can cut down 160 hours to 10 minutes, how much the Navy will pay? I didn't say this is direct match, but I just link it together because they announced in the same year. So I just link it together. They didn't specific say it's shipOS. They just said it's moved to essential industrial infrastructure, defense industrial base. So from that, they make $500 million, 0.5 B. 448. And another thing about like all these AI tools or AI software, right? So in all the business world, right, there's this role called consultant. And then consultant like Essential, KPMG, EY, they act as a so-called consultant to tell the end client which is the best solution to help your current business situation. So a lot of all these software implementations or selling distribution rely quite a bit on consultant. So previously, I didn't quite appreciate this relationship until I go into learning a bit more about consulting. Then I understand it a bit more, because for a business owner or even people who run the business have so much problem in their existing business they need to address. How can they put much more resources to learn what is the best software out there? So they rely on consultant, in a sense that consultant understand their business as well. So they have also launched new AIP tools for all their clients. So this is AIFDE. One of the biggest issue is how to put all these data all together. Maybe AWS, I have data at Google Cloud, I have data at maybe Azure. So all this is all over the place. How can I put everything together to maximize all the data that I already own? So they address all the data migration. So this is the solutions they provide with AI FDE. If you ask me, this is alien to me as well. But the key idea is to gather all their existing data from different places in this single space called AI FDE. So this is the figures. You see that it's all about US commercial here. They show all the big figure. Wow, 130%. You see US government revenue growing at 66%, total government revenue growing at 60%. There isn't much international business right here. You can see a difference. So this is the thing that they claim. We are at rule of 120 frontier. they draw this line themselves, rule of 120. Nobody want you to draw this line and then you draw this line yourself. But if they do this themselves and they couldn't meet as high, right? The share price dropped down, right? Maybe it's an opportunity for us also. Huh? Okay, so rule of 40, they 127, right? What's more than that is like they have net dollar retention of 140%, which is very healthy for a software company. Even CrowdStrike, also like 110-ish, they have 140%. Means people are paying more in this environment. Alright, come to the commercial number. So US commercial grow by 137%, commercial revenue growth by 82%. Let's say you take 372, right, minus 214, is it? Is 158. So quarter 4 2024 is 158. And then we take 677 minus 507 is 170. So for the international commercial, they just grow by a mere 12 million. Actually, I'm quite concerned. Hey, sure or not? Is it the international client don't want to take your business so much that you can only rely on US market? This is my first concern when I look at the slides. My first concern, hey, really? What if the US commercial have saturized and then you cannot grow from there? It's like you already gather like close to 507 million for the quarter. So full year is like 2 billion right there already. So if you look at commercial compared to government, right? So government, yeah, might be political issue, but commercial is business. Business talk about dollar and cents and money. So I thought actually, maybe you didn't grow as much, but at least you maintain. This is their financial report. They didn't give the exact figure. I just calculate it. So with this operating income, with this revenue, this 61% is based on 7.2 billion. This 57% is based on 4.14. So you're already taking the upper end already. So could they maintain rule of 120? Wow, I don't know why they want to draw a line. But they also raise this thing. They are the end of one. What they want to highlight is they are the only fair company that focus on scaling the operating leverage made by AI model. In other words, they are not burning money doing all those LLM research like all these hyperscaler because they think all these things will be commoditized. All this AI model means nothing if there's not an application layer. All right, if it's not application layer that help customer, the usage of all these AI model will become commodity. Commodity in a sense that you will not have margins. There's no value add. Like one of the key thing is 77% from US market alone. Moving forward, we have to move away from just growth. You must look into quality of growth in a sense that the net dollar retention is very important. So yes, they have a lot of revenue growth, right? The retention is very important. And if there's like again in net dollar retention, is even better. So right now they are at 130-ish. So 130 is the numbers that we also have to look at. Quality of growth, not just revenue growth. Our operating leverage, they have the 127, right? They draw a line, right? Next year cannot really because the revenue size grows so much. Their margin cannot expand at the rate as well. All right. So that's why the rule of 120 is a bit hard. So this is the three things that we can look into, especially for next year. So Palantir, I give you enough ideas of what is the development, what is the risk. For example, they draw a rule of 120. Can they meet that? They have high constraint on US. Are we concerned? Okay. An early happy Chinese New Year and hope you guys have a good fire horse year ahead. And then yep, our portfolio will be green all the way. That's it for today's video. If you learned something new, give it a thumbs up, comment on what you'd like to watch next, and don't forget to hit the subscribe button so you don't miss out the future uploads. Until next time, stay informed and stay safe.